Seeing is believing. In my last educational video, I spoke to the senses of hearing and feeling a trade. Go to our website and click on the Education tab and look for the video Making Sense of Your Senses in Your Trading. In this video, I will explore the sense of sight and its importance in your trading. Admittedly, I have been eyeing charts for a long time. That is an advantage, but it is also something you can train yourself pretty easily. It is easy because I have a consistent and somewhat systematic way to see the market, and I believe in that is repeatable, that can define a bias, whether it be bullish or bearish, and also define risk levels and targets. All those things are the backbone of trading, and it is why having a consistent approach to your trading is so important. We need to see fairly easily where there is value, whether you are buying or selling, whether you are entering or taking a profit, whether you're stopping yourself out or getting to and through a target. So you need to see places to enter with a reason. You need to see a place to exit if you're wrong with a reason. You need to see a target to go to and get through that gives feedback for your trade, and they need to have reasons. You need to see a place to take profit with a reason. There are many traders who don't see these places with reasons. I call those traders gamblers, not traders. They don't have a reason, they just trade. In reality, it is no different than betting red or black on the roulette wheel. Those traders who have a hunch and bet a bunch are not trading, but are gambling. The tools I use, the approach I apply, is reliant on what I see. From what I see, it tells me the story, that hearing part of the market's voice in your mind, in my mind. That story should make sense so that what you see is truly what you believe. If you can believe what you see, what does that do? Well, it diffuses fear. You are able to also limit your risk, which in turn allows you to make more than your risk more easily. If you can see a level to trade that requires only 15 pips of risk to your trade, you only need to make 30 pips to have a 2-to-1 risk reward. Forex markets can move 30 pips in a minute. That is easier than risking 50 pips to hopefully make 100 pips tomorrow or sometime in the future, because it takes time for the market to get to a 100 pip intraday move. It is simply further away. There are going to be ups and downs along that 100 pip move, which allows for fear to cut off trades early. It also allows for the chance of unknown news story to take the wind out of the trade's sails. So what are those reasons I speak of that give me the belief in what I see? The reasons are technical levels defined by tools, simple technical tools that most experienced traders use. If you were a carpenter, you need a hammer to hammer. You need a screwdriver to screw a screw and a saw to saw wood. If you are a programmer, you have tools to code. If you are a doctor, you have tools to do your surgery. If you are a trader, you need tools too. Why do carpenters, programmers, doctors use tools? Well, to make the job easier and to define and limit their risks. A carpenter that does not have a hammer is not going to get the job done. A doctor without the tools needed for surgery are going to have a lot more patients dying. Traders and carpenters and programmers and doctors need tools, not hunches. So the tools I use are ways that I can see things like entry levels and stop levels and targets and profit-taking levels. They allow me to build the trader's equivalent of a house or perform brain surgery. The simple tools I use, like this swing area against the highs, would have allowed me to sell the dollar versus Canada here against these highs and put my stop here, because others are seeing the same risk-defining level with limited risk. It would allow me to target this area because of this reason, and this reason, and this reason, and this reason, in this area, and give me the opportunity to look for more downside momentum or perhaps take profit and make a multiple of the risk of the initial trade. If looking for more downside, it would allow me to see the target at the trend line and the 100 bar moving average here and take profit here, or stay with the position and manage my stop down to here on the chance for a break below the trend line and the moving average level. The tools would allow me to see the target at the 50% midpoint, the 200 bar moving average here, and the swing area here, and exit the trade. Why? Because that is a lot of support, and there's a key CPI about to be released. Risk this much to make this much simply by what I and countless other traders around the world see and believe as a result of the simple tools of the trade. The hammers, the programmer's code, the doctor's emergency equipment are all being used and believed in. Now, what I see may not work out the way I believed it would. There are times when the market just doesn't do what you think it should do. I could have seen selling here against the swing area in the underside of the broken trend line, but once I saw the price not get below the 100 bar moving average here and start to move back above the top side of the swing area here and the underside of the broken trend line, I can see I need to stop myself out at a loss. That is okay. The patient did not die. I swapped out the hammer for a screwdriver and the house was indeed built. The levels I see, I outline every day on forexlive.com. It might be at this target on the euro versus US dollar, or by defining the bearish bias and the risk against the 100/200 hour moving average on the dollar versus Canada here, with the downside targets outlined here and here and here. The point is, seeing is believing in your trading. Tools that define risk and limit risk that other traders use and see are important in that belief. But once you start to see, your eyes get bigger, and you will see your account balance get bigger as well. I hope you liked this video. If you did, give it a thumbs up. If you did not, give it a thumbs down. Also, please subscribe, put comments. We want to hear from you. My name is Greg Michalowski. Good fortune with your trading.